This is a community-supported legal education channel. Find out how you can support our mission at the links in the description below. So there's a proposal winding its way through Congress to provide relief for some of the people who are suffering right now, including paying direct cash payments to taxpayers through an IRS distribution in April and one again in May. The Treasury Department is circulating a memo. This has not been approved yet, but this is something that's really important. This is apparently the third bill. There was a healthcare funding bill. There was a paid leave bill, which we'll go over at the end of this. And now there is a plan to distribute $1 trillion as stimulus and relief for the current situation. $300 billion for small business loans, $200 billion to airlines as loans and other industries, and a $500 billion direct distribution to Americans over the course of 2 months. I don't believe that's being proposed as a loan. Steve Mnuchin, the Treasury Secretary, said, "We are closing down parts of the economy to make sure we destroy this thing. At no fault of their own, we're telling people not to go to many businesses, and we're going to deliver assistance. We're going to make sure that companies have money so they can continue to pay those employees." So let's take a look at what this says, because of course everybody wants to know. This is from the Department of Treasury. This is more like a memo that's being circulated. This is a proposal, and here are the 2 pages of key terms to the proposal. Appropriation to the Exchange Stabilization Fund for specified uses. What the heck is an Exchange Stabilization Fund? That's a little weird. The Exchange Stabilization Fund is an emergency reserve fund for the Treasury Department, normally used for foreign exchange intervention. So I'm assuming exchange rate intervention. This arrangement, as opposed to having the central bank intervene directly, allows the U.S. government to influence currency exchange rates without affecting domestic money supply. I'm not sure exactly how they're proposing to use this foreign exchange intervention fund to stimulate the U.S. economy. Even the Treasury Department itself confirms that this is a special funds for stabilizing foreign currencies. But okay, so take this all with a grain of salt. But they're talking about providing the following to American citizens. A $50 billion airline secured lending package, which would make $50 billion available to the Exchange Stabilization Fund and authorize the use of those funds for secured lending. What does that mean? Secured lending is when you secure the loan with some kind of collateral. So putting up property, including airports and airlines and airplanes, would probably be things that I would expect to be used as collateral in order to obtain a loan for U.S. passenger and cargo air carriers, and that's a $50 billion stimulus. The Treasury Department will determine the appropriate interest rate and terms and conditions. The secured collateral will be specified by the Treasury Department, and there must be continuation of service in order to obtain such a loan, and limits on executive compensation until the repayment of the loans. Other severely distressed sectors of the U.S. economy get $150 billion. This would loan approximately $150 billion and authorize the use of those funds for, again, secured lending or loan guarantees to assist other critical sectors of the U.S. economy experiencing severe financial distress. Then there would be a temporary permit for the use of the Exchange Stabilization Fund to guarantee mutual funds. Not sure what's going on here. Temporarily suspend the statutory limitation on the use of funds for guaranteed programs for the U.S. money market mutual fund industry. Somebody maybe we can explain what's going on there in the comments below. So here's the section on direct economic impact payments to individual taxpayers. This provision would authorize and appropriate funds for 2 rounds of direct payments to individual taxpayers to be administered by the IRS and Bureau of Fiscal Service. A total of $250 billion to be issued beginning April 6th, a total of $250 billion issued beginning May 18th. Payment amounts would be fixed and tiered based on income level and family size. The Treasury is modeling specific options. Each round of payments would be in an identical amount. So calculating that out, 500 billion divided by approximately 250 million eligible U.S. taxpayers would equal somewhere around $2,000 broken across 2 payments, so an average of about $1,000 per individual taxpayer. It seems like there's going to be accommodations or adjustments for family size and income level, so it's going to be maybe a little bit more for some people with a large family and a low income, and maybe a little bit less for people with a higher income and no family. So who knows what's actually going to be the number, but the average seems to be 500 billion divided by 250 million, about $1,000 per U.S. taxpayer in each payment. So that means if something like this passes, then you'll get a direct check, I guess, from the IRS in order to help you pay your bills and keep the economy going while we are all dealing with this situation. And then small businesses. If you have a small business with less than 500 employees, I guess including 500 employees, this is a loan program to provide continuity of employment. It authorizes the creation of a small business interruption loan program with approximately $300 billion in the program. The U.S. government would provide a 100% guarantee on the loan. The loan amounts would be 100% of 6 weeks of payroll, capped at $1,540 per week, which is approximately an $80,000 employee annually. The employee compensation must be sustained for all employees for 8 weeks from the date the loan is disbursed. The lender would be various U.S. financial institutions. The lender verifies the previous 6-week payroll amount and later verifies the borrower has paid 8 weeks of payroll from that date. The authority for the U.S. Treasury to issue and grants authority to the U.S. Treasury to issue regulations establishing the appropriate interest rate, loan maturity, and other relevant terms and conditions. So they're going to end up using the foreign exchange stabilization program to stabilize the U.S. economy, I guess. So then there's news here about the passage of H.R. 6201, the Families First Response Act. So it says here as a summary, this bill responds to the problem by providing paid sick leave and free testing, expanding food assistance and unemployment benefits, and requiring employers to provide additional protections for healthcare workers. Specifically, the bill provides fiscal year 2020 supplemental appropriations to the U.S. Department of Agriculture for nutrition and food assistance programs, including the Special Supplemental Nutrition Program SNAP for women, children, and infants, which is called WIC, also called WIC, the Emergency Food Assistance Program, nutrition assistance for U.S. territories. The bill also provides 2020 appropriations to the Department of Health and Human Services for nutrition programs to assist the elderly. The supplemental appropriations provided by the bill are designated as emergency spending, which is exempt from discretionary spending limits. The bill modifies USDA food assistance and nutrition programs to allow certain waivers for school meal programs, to suspend the work requirements for SNAP, and allow states to request waivers to provide certain emergency SNAP benefits. In addition, the bill also requires the Occupational Safety and Health Administration to issue emergency temporary standards that require certain employers to develop and implement a comprehensive control program to protect healthcare workers. The bill also provides establishment of a federal emergency paid leave benefits program to provide payments to employees taking unpaid leave due to the problem, expanding unemployment benefits and providing grants to states for processing and paying claims, require employers to provide paid sick leave, establishing requirements for providing diagnostic testing at no cost to consumers, treating personal respiratory protective devices as covered countermeasures that are eligible for certain liability protections. I guess that means if you provide them to someone, you're not liable. I'm not sure. Temporarily increase the federal medical assistance percentage, whatever that is. So that's what's going on. Just thought you should all know. Let me know what you think in the comments below. I'm going to keep this one short. Thank you to all of our supporters on patreon.com/ljfrench and sponsors.com/law. Please check them out on the crawl in front of me and in the description below. Love you all. I'll see you later. Bye.
We stay with me. I'm season.